Again, welcome everyone to this webinar. We are going to be the Restaurant Recovery 2022 update. We're going to be diving into all things restaurant related, as may be clear from the title. And in terms of how we're going to be doing it, we're going to start off with a very brief introduction to Placer for those of you who aren't familiar. We're then going to dive into the dining sector, look at where things stand at the moment, the impacts that have been affecting the space over the first months of the year. And then we're going to look ahead at some of the big trends, how they're playing out, what they might mean moving forward. And as always, we will leave time for Q&A. If at any point throughout the webinar you have a question, please use the Q&A box either at the top or bottom of your screen, depending on how you have Zoom configured, and we will try to get to as many as possible. Again, please use that Q&A, not the chat function. It just allows us to be a little bit more on it when questions come in and not miss any, but we will look at the chat as well. I want to take this moment to welcome my guests. Very importantly, we did this focus on restaurants, it was maybe a little over a year ago, and we had these same guests. And the conversation was amazing and really, really insightful. And I walked away and we got so much amazing feedback that we decided to just run it back and do the exact same thing again. So please welcome Emily Durham, SVP, Brokerage and Food and Beverage Advisory at JLL. Emily, thank you so much for coming back.
Thanks for having me.
And Alicia Kelso, Senior Contributor at Forbes. Alicia, thanks again for being here.
Always glad to join. Thanks, Ethan.
I mean, it's one thing to convince someone to do it once, but when you get them to come back, that's the sign that you're doing it right. All right, so how does Placer work? For those of you who are unfamiliar, Placer is a location data company. What that means in the simplest terms, people vote with their feet. We're showing you how they vote across the United States at retail locations every day. How do we do that? We observe a panel of over 30 million devices throughout the country. Very critically, this is all anonymized aggregate data, so we are GDPR and CCPA compliant. We then analyze that data with AI and machine learning algorithms to make estimations on visits to retail locations across the country, and we present that data in a wealth of different reports within our system on everything from visit counts, cross-shopping, the customer journey, and a whole lot more. For those of you who are interested, we have a section on our website called The Square that is the home to all of our free tools. We also have a free version of our premium product that is available at placer.ai. We did see one comment come in about recordings. Yes, this recording will be available by tomorrow morning Eastern time at the exact same link. You just put in your information, it'll pop it up as a YouTube link behind that paywall. Not paywall, I guess registration link. All right, so let's start with kind of dining overall. And Emily, I want to start with you. When you look at the dining sector overall, how has the recovery aligned with your expectations?
I think that my expectations and a lot of, the larger view of the country is it's just so regional. And I am speaking from Texas and doing most of my work in Texas. And we expected things to come back and, and be better than ever. And it did. And I think that there's just several things at play there. The weather, we have a lot of patio seating in Texas, and that was really important to people. So those have filled up and the patios keep getting bigger. And for example, we had landlords and lifestyle centers allow for patios to now spill over into parking spaces and, common area walkways. So they've really made it more conducive to the sort of newer preferences after COVID. And, I think a lot of it has to do with the local municipalities regulations as well. So it's been easier here in Texas to operate. When you compare it to the two coasts, the difference is like phenomenal. I think our dining is up 5% and the two coasts were down maybe 25%. We were able to open long before other people. So at least for the states with friendlier, laws for the businesses about reopening and having people back in there, it's just been great for this region. And I think the Sun Belt in general.
I mean, I think you make a really important point. It's something we've seen kind of in other metrics that we look at as well, just kind of the benefit that cities, in Texas, certain places in Florida, Arizona have seen as this boost. You talked about the patio kind of seating and how important that is and the extended ability to do that in a region like that. I mean, Alicia, I want to ask you the exact same question, just because I do think this is such an important kind of table setter. Again, when you see this recovery and how it's kind of extended from the doldrums when we saw it in kind of the peak of the pandemic, how has it aligned with your expectations?
My expectations, I think that's tricky to answer because I'm not sure I ever had expectations because, from a coverage standpoint, it's just been so dizzying, the back and forth, the restrictions, the lifting of restrictions, the regionality, like Emily discussed. And I would take her comments and go a little bit further. What's been interesting in the past couple weeks, especially as largely across the country restrictions have been lifted, we're seeing that pent up demand from the East and West Coast come into play. I did a story earlier this week about independent restaurants in particular that are seeing at least intentionality and traffic upticks, and the two biggest markets were Los Angeles and Seattle, which were heavily restricted. So the definition of recovery, I think that to answer that question, I think it depends on how we define recovery. From a sales, industry-wide macro level, from a sales perspective, sales are pretty good. The industry is doing well on sales. A lot of those sales, though, are coming from menu pricing. And so it might be a little bit of a misnomer, and these concepts are having to keep pace with historic inflation levels. And because of that, they haven't been able to cover those inflation levels. So profit margins aren't as high as they could be. So we have high sales, but profit margins aren't that great right now. And, I think this is where Placer is a good resource, and other, traffic measurements. Traffic indicates the health of the business, right? Always. So we're seeing traffic start to return. We've seen traffic start to return. And to me, that indicates recovery. That indicates pent up demand far more deeply than, generally than sales do. What concerns me, and I know we'll get into this a little later, is we're starting to see the consumers reach their threshold on pricing. We're starting to see consumers impact as it pertains to inflation. And I think that the restaurant industry is in a precarious situation because of that, but it's early days.
I think you touched on something really important, and I would say for me, I was shocked to see some of these, again, QSR success, I think was almost a given that it's the Walmart and Target of kind of the restaurant space. But to see some of these sit down restaurants rebound as fast as they did, I mean, I think it's remarkable. And I think sometimes we're not giving it enough credit just because of, I think there's some who saw it were a lot more confident, but this is everything that could go wrong did go wrong for a lot of those, and they've rebounded incredibly well. But Alicia, like you said, and I'll start with you here, there has been this new wave of challenges from inflation and rising gas prices, and they do appear to be having a lingering effect on the dining space. Is there a way dining players can adapt, or is this the kind of thing where you just need to wait until it's over and kind of stick it through?
Well, waiting it out is never fun, especially when you've been through 2 years of, a deep crisis where nobody was really sure where the light at the end of the tunnel was going to be. I think we're starting to see and have been starting to see some adaptations. I think operators have been, creative with the menu, for example, in adapting, to some of these inflationary pressures, either slimming their menu. I did a head interview last week about how orders of pre-made products are up over 50%. So they're trimming labor out on that side of the equation. Chains like Wendy's have shifted some of the labor to their supply chain to trim, to cut lettuce before it comes into the store. So it's a little bit more expensive to pay for that, but it's not as expensive as the labor required to do that. So we're starting to see puzzle pieces sort of being moved on the back end of those restaurant operations. We're also seeing a really accelerated proliferation of automation to handle some of these inflationary pressures, particularly on the labor side. We're seeing Flippy flipping burgers and Chippy making chips, and it's super early days on that. It's certainly not ubiquitous, but we're starting to see a lot more experimentation, and not just with these sexy, shiny kitchen equipment, robotics, but we're starting to see automation of, some of the less sexy things like business intelligence, supply chain inventory, those things being automated, because all of that comes into play to save on labor. So I think that adaptation is going to continue to grow at a pretty fast clip, because again, nobody really is certain when this inflationary environment's going to end.
It's super interesting, especially the idea of kind of finding those cost-cutting measures on the back end. Emily, from your perspective, has this added wave of obstacles, has it impacted the way brands are looking at expansion opportunities? And I'd add the caveat to that, should it impact the way, or is this like a short-term thing where don't over focus on a short-term challenge?
I would say that is 100% affecting expansion strategies. And in so many cases, we're learning the hard way. I mean, I'm a tenant representation broker for restaurants. I go help restaurant operators and chains find their locations. And so I'm really seeing it firsthand on a daily basis. But just run through them. The increase in construction costs alone are now making certain locations just, it doesn't fit in the business model anymore. So the cost of construction materials, the inability to find labor, which is worse than ever. The length of time for things like SBA loans and the length of time that is increased for getting permits in certain municipalities has just made it super hard to commit, especially to new spaces that are going to be built out. Need landlords' assistance more than ever. We spend a lot of our time nowadays going back to the landlords and asking for concessions and asking for help or asking for more tenant improvement monies to build out our location. And here in Houston, I think our overall vacancy for retail in general is 5%. And so when I say that most restaurants, especially the fast casual groups and fast fine, they want second generation spaces, and it's just so limited. And I don't think people realize that. And to kind of tag on to what we were saying before about regionality, we have people coming here from the markets that were hardest hit. There's operators coming here from California all the time, and they can't believe there aren't more closed spaces available because that's what they're seeing in their markets, and we just don't have them. So the obstacles are huge. And again, everything comes down to your numbers, right? Like Alicia was saying about the bottom lines, and some of these obstacles prohibit a successful business model.
And Emily, is this, in your opinion, is this why we're seeing such a wild growth in the virtual and ghost space, because of those prohibitive construction costs and lack of availability?
I mean, I think the ghost, I think the ghost kitchen stuff started as a response to COVID and nobody wanting to go to restaurants. Once again, though, ghost kitchens don't already exist. And so everybody wants a ghost kitchen or a commissary kitchen. In most cases, they have to build it. Sometimes we're able to find second generation spaces that are too big for today's operators. I know that's part of one of the topics of our conversation. They're going to obsolete, to have an 8,500 square foot restaurant. So maybe we can use that as a ghost kitchen. But by and large, we don't have warehouses that are fully fitted as commercial kitchens sitting around waiting for people. So everybody seems to have gotten pretty creative with community kitchens and ones where somebody else builds it and everybody has just a smaller space for them. But I think the success of that business model really remains to be seen as well. What we know is that more people are doing takeout.
Yeah, that's it's such an interesting conversation, the whole ghost kitchen thing, because I think you touch on something that's so important. If space is at a premium, and the whole idea of the ghost kitchen is we'll get you close to the consumer, but you don't need to have all of the other kind of bells and whistles that go with the restaurant. The close to the consumer part is still really difficult. And so if you can't, I know this is obviously not the same, but you think about micro fulfillment, the challenges they're finding is finding spaces to put it in to get close to this so you can have this 1 hour delivery. But it's really hard to find that space. And so it's a big challenge. I don't think I think sometimes we're like, well, this should work and it makes perfect
Yeah,
sense
just
as like a conversation, but in practice, it doesn't.
Yeah, and one innovation we're seeing, which is smart, is any great operator that has excess capacity in their existing kitchen. Now there's all kinds of doubling up happening, whether it's them creating a different brand from their own kitchen, which has been prolific, at least in this part of the country, or there are some companies that are approaching operators around the country to see if they have excess capacity, and then putting in, almost like a franchise, putting in some of these national virtual brands. And so at least that's really efficient and thinking on your feet.
Yeah. I mean, I want to get to this question, then we'll go to the next topic. And I love it because this is something we discussed the last time we were speaking. And this is the great question, comes from anonymous attendee. So thank you for that question. Are you seeing increased demand for pad sites with so many restaurants prioritizing drive-through coming out of the pandemic? It seems like competition for pad site locations with drive-throughs has escalated. This was one of our big conversation. Were we overcorrecting to kind of drive-through? And so I'll frame this as the same question. I'll go to both of you with it. Emily, let's start with you though. Are we overcorrecting to drive-through?
I mean, we talked about this the last time and it's not going away. Not only does everybody want to drive through, now we have a large group of operators that want double drive-throughs. So, it's just hard to make the economics make sense, because people like Dutch Brothers and some of those other, double drive-through brands, they need a 500 square foot building, but a double drive-through. And so again, there's only so many sales you can do out of a 500 square foot building, but the cost to take down the pad site is not cheap. So the demand for drive-throughs is still tremendous. I think we talked about last time, just, the creativity we're starting to see from developers, like, instead of a shopping strip that has 2 end caps, now there's an internal space as well that can have a drive-through through it. So yeah, not going away.
Alicia, your thoughts on this same issue?
Yeah, it's a great question. And if I had a dime for every story I wrote about this brand is now adding a drive-through, I would be retired. I mean, Applebee's is experimenting with drive-throughs. That's where we are. And what a lesson learned, that consumer behavior has always gravitated toward convenience and the drive-through, but it became a necessity for over a year and a half. And so now I think, Ethan, this goes really well with the that sort of omni-channel conversation. Have we overcorrected on drive-throughs? I don't think we're there quite yet. I think the competition is insane right now, where I don't think that some of these traditional QSRs, like KFC or McDonald's are hoping to get back to net new unit growth. I don't think they were expecting that they were going to be competing with Starbucks or Shake Shack in suburban markets for drive-through locations, or Applebee's. And so, that I think that leads into a new conversation where consumers just sort of expect all things from restaurants. And I did a story last week about Carl's Jr. Hardee's parent company, CKE, investing $500 million into this, the biggest transformation in company history is what they called it. And a part of that transformation, a big part of that was the real estate piece, right? They've got 5 new typographies. And part of that is to save on construction costs, like Emily discussed, but part of that is just because, they don't want to just give their franchisees flexibility. Their consumers kind of expect that flexibility, from a real estate perspective. So I think brands are trying to reconcile those two things right now. And I think multiple typographies is probably the, where we're going. And that includes traditional, includes drive-through only, and everything in ghost, everything in between. And it's really interesting to see the very quick gravitation toward multiple typographies from brands.
I would
Super
love to
interesting.
just add a note to that, because that's such good points there. Not only, to expand on the typography conversation, not only are people looking for drive-throughs, but it's gone way further than that. We have walk-up windows, we have to-go windows. Any way a human can take food out of a restaurant without walking inside is happening. And, the other thing we're doing is having to re-educate the consumer to some extent too, because in the past, we have associated drive-throughs with fast food. You pull up to the board and we order. But now for some of the restaurant operators that don't have that throughput speed, now our drive-throughs are for order pickup. And so we just have a lot of moving parts here, and there's just, we have to re-educate consumers on how to use our restaurants, because that would mean you would have had to pre-order the food.
Yeah,
And
and
that's
Emily,
new.
and there are concepts that are adopting pickup windows at the drive-through just for delivery drivers too. So your notion of complexity is spot on. I mean, it's a huge conversation right now, and there's more audiences than ever, because the consideration of the delivery driver is now a part of that conversation operationally. They want to make it easy, quick, convenient for consumers, easy, quick, convenient for staff members fulfilling the orders, and for delivery drivers. And so
Wow.
they're changing all of this stuff for all three of those.
Go ahead, Emily.
As real estate brokers, it's changing the way we work on deals. Like most every restaurant deal I do, I'm asking the landlord to provide a space for third-party delivery drivers, because it's mandatory. And if there's no way for somebody to easily park and get the food, it's not going to work anymore, depending on the concept. But you're absolutely right.
It's so fascinating, because it does just kind of, it changes the way you have to create a center if you want to attract top tier restaurant concepts. Because again, if everyone's doing drive-through, and I think there's a question to be had if everyone should be all that, but if they are doing it, you have to be able to accommodate it. Otherwise you can't take in that demand. I mean, I do want to focus a little bit on QSR for a second. I mean, we've talked about this a little bit, but I think it's been, Emily, let's start with you here. The value orientation, the multi-channel, the delivery strength, the drive-through strength, obviously a huge asset throughout all the challenges that we've seen. And it's been one of the strongest performing sectors within the dining space as a result. Does this strength last, or is there some normalization coming, or is this just, hey, this sector is just great, it peaked, and then it'll just go back to being great again?
I know. I don't know. I feel like it's a little bit of the Wild West out here with, especially as it relates to things like this, because it's like getting hit from all sides. I think that inflation is taking a very hard toll on fast food now, because the fast food customer oftentimes is more sensitive to inflationary changes. And, I think we also talk about re-educating a consumer. It just doesn't work the same anymore, because they're making everything digital. So will everybody adapt to the new way of ordering a Big Mac? I think it still remains to be seen. And like you guys said, that now fast food is competing against fast casual and fast fine, and Applebee's having a drive-through. So, I mean, it's going to be tough.
I mean, it's a great point. Alicia, from your perspective, how does this space need to evolve in order to continue being as strong? And I know we're talking overly generally about a very wide sector, but are there kind of key themes that you think should be driving innovation moving forward for this space?
For QSR specifically, I think it's kind of dichotomous right now. I think QSR is always going to be um, in a favorable position because consumers have been barreling toward convenience for a long time, and the pandemic accelerated that. And so QSR is favorably positioned because even while casual and fast casual are adopting, digital off-premise channels to be in that convenience consideration set, QSR is historically the space for convenience, right? And they've got the footprint that is convenient. If my kid is throwing a tantrum, there's a McDonald's right there. And so I think QSR will largely continue to be insulated because of that convenience consideration set. That said, I think that QSR is, like Emily said, the current macro environment is particularly pressuring over a third of QSR consumers, under 75,000 household. And that is, I think, 34% of QSR customers. Their threshold for gas is $4. And we've been above $4, I think, for 3 months now. And they stopped spending at restaurants and they stopped driving as much. So until we get out of the inflationary environment, I believe we will, and probably next year, I think that is going to be really hard for QSR. I think the biggest issue right now with QSR that we probably haven't talked about enough is labor. They're fulfilling orders from more channels than ever. I think I didn't see the question in the chat. Somebody was talking about the dissipation of service. It all comes back to labor. In my opinion, we've got a problem in this industry with retention and recruitment. We've got an all-time high quit rate. And I think that we kind of have to have a kind of a come to Jesus moment industry-wide on how we attract and retain labor competitively. And that means flexibility. It means way more than wages. And I think we have to illustrate that this is not just an entry-level minimum wage job, but a career path. And I really think that's going to be our biggest challenge in QSR and otherwise.
I mean, Emily, I want to hear your thoughts on this too, because I saw there were two great comments, and they talked about this issue of service. And what's fascinating here is, I'm sure a lot of the folks who are joining today are really focused on the restaurant space, but this is a retail issue too. We're seeing those labor shortages. We're seeing people not being. It's interesting. I don't know if it's just wages. It's fair compensation. So when you see all the success happening, you don't get to benefit from them. I think that's almost worse than the wage. It's like, hey, I'm doing a great job and I'm not benefiting from all the value I'm bringing. Like, Emily, I don't think there's a magic pill here, but what is the solution based on to kind of solve this challenge?
Well, I mean, I think I feel that there's a bigger recruitment issue than there is, that to me, that comes before the issue of keeping people happy. There's so much conversation out there about looking into other sources of labor pools, whether it's retirees or people coming out of prison or people, that you wouldn't normally reach out to immediately for your job opening. And it's just fun. I feel like there's this sentiment of just finding bodies is the, the name of the game, and then we get to the next question about keeping people happy. Someone was saying just yesterday that they believe that people need to feel like they're part of a family and special and that they belong. So, I mean, there are lots of different theories on what could work, but at the same time, Target and other retailers are paying a much larger hourly rate than they ever did before. So I really think it's in some cases as simple as restaurant employees leaving to go to take jobs that have benefits, that pay more, that you're in air conditioning for, et cetera, et cetera. So there's just a ton of challenges to our labor force.
Yeah, and I would add too that the restaurant industry notoriously has had a big sexual harassment problem, and that was compounded during the pandemic, where restaurant workers were forced to enforce you can't come into this restaurant without a mask. You can't dine in this restaurant unless you show vaccination. And that, that they're not trained for that. And so, people who were going out to eat in the throes of the pandemic didn't want to hear that. And I think that level of harassment was really compounded. It went from just sexual harassment to when we saw headlines across the industry where some of these workers were bearing the brunt of this, and I think that kind of added to the problem a little bit, unfortunately, and I'd like to see us come back from that.
Yeah, I mean, it's such an interesting point that we blame these barely minimum wage workers for decisions that are made by corporations or governments, and then that's what we're trading out. I'm skipping a little bit ahead because I love this conversation very, very much, but I want to make sure there's some topics we get to. And one of the topics I get to, and we spoke on a little bit, is this. I want to talk about the suburban shift a little bit. So our move to kind of more people being, here it is. And then I'll go back to Omni as well. But I want to talk a little bit about this kind of suburban shift and what we're seeing with a lot of chains seeing strength in the suburbs as opposed to the urban areas. And Alicia, let's start with you here. I mean, how can chains that were oriented in those urban environments, in those office centers, how do they drive a comeback?
I don't think Chipotle has ever had to worry about that. And they benefited from Chipotle lanes. What I would think of like more of the Shake Shack, Sweetgreen type concepts, and they're doing that, Ethan, by they're shifting their entire development strategy to suburban markets. And Chipotle is doing that as well. I don't want to be dismissive of that at all. I mean, Starbucks is doing it. So all of these companies that, historically were urban centric, and I think about Sweetgreen specifically, they're starting to plant their seeds in markets I never thought they were going to. And they're adding the drive-through. Sweetgreen has its first drive-through. Shake Shack, I never thought I'd see a drive-through at a Shake Shack, And obviously, I mean, the Chipotle growth story, I think it's 80% at least of their new units will have a Chipotle lane. So that's exactly what they're doing, to keep pace with this. What I'm also seeing something kind of interesting is some of these concepts that are now honing in their focus on the suburban shift, if you will, are kind of shifting their menu a little bit too. The morning commuters, now the day part is like 10 to 11 instead of 7 to 8 during the morning commute. We've corrected that a little bit. We're starting to see breakfast come back from morning commuters. But I think that there's going to be some permanency in this hybrid work model, and I think we've seen chains adapt thusly with their focus on expanding into suburbs with drive-through models.
I mean, super interesting. Emily, a similar question, but taking this idea that this kind of suburban shift is real, it's happening, and it's I think it's really significant, especially in the restaurant space. How big of an impact do you think this will have on dining moving forward and the way more chains look to expand, kind of as Alicia alluded to?
I think it's going to have tremendous impact. And I think there's a lot of unknown in here as well. And on a daily basis, if I had a crystal ball, the main thing it would be telling me is when people are going back to work and at what rate. Because, when we look for fast casual locations, we're talking about daytime population. Well, now daytime population has completely changed. And so an operator, considering a $400,000, $700,000 investment, where we might have done it in a central business district before because of the lunch crowd, people are working from home from suburban markets. It's anyone's guess. Obviously a lot of that is going to stick. We all know there's a lot of people that have gone to work from home and they're going to keep working from home, but I don't think we know for sure. So, that's why we have Placer. and try to figure out what people are, where they're going and what they're doing. And it's really to strategically plan out a market right now for operators is tough. It's just a lot more challenging because we don't know. And I think, this is especially applicable to fast casual concepts that rely on lunch business, or that we would look for that population for. But I do think that for all our chef-driven concepts and fine dining restaurants, I still think that a lot of that remains in the cores of the cities. And that when people are going out for a nice dinner, they're driving still to the core. And that we don't see as much success with taking some of these high-end operators, fine dining operators, chef-driven stuff, and taking it to the suburbs.
You hit on something that's so important, because you've actually said two things that I want to call out as being really important. One, this idea of the chef restaurant as being synonymous with the city, because it's supposed to be fancy and upscale. And there's only I grew up in the suburbs. I love the suburbs, but there's only so fancy that Allentown, Pennsylvania is getting. Like, it's just, again, however much you love it, that's just the reality. And I apologize if there's anyone from Allentown on this. But I also think the other thing you said that I want to really harp on is market education, because I think early on in the pandemic, we heard a lot of people talk about our job is not to educate the market. Our job is to kind of be where they want us to be. But I think if anything, the last 6 months especially have taught us, nope, your job is to incentivize behavior, figure out how to find win-wins, educate your consumer and your audience about why this win-win works for both of you. And whether you are a restaurant or a retailer, that concept of, hey, it's just the customer is always right, that is no longer the situation. And you don't have the ability to do that. And I think it's just a really important thing to call out, because I think it guides folks in the wrong direction. I want to get to a question that came in, sadly another anonymous attendee, but credit, who you are. Great question. Do you think the low interest rates during the pandemic gave restaurants an artificially optimistic view on expanding their operations, especially with the sudden consumer rebound as pandemic restrictions eased? Do you think there's a chance for a correction moving forward? Alicia, I'd love to start with you for this one.
I do. I think there's a little bit of false optimism because of low interest rates. I think a lot of people, not just restaurant business, probably had that. So I think it's going to correct itself. I'm not going to predict when, but when it does, I think we'll see the same thing that we've seen for the past 10 years. And that's the well-capitalized, concepts will come out well-positioned. Fortunately or unfortunately, it doesn't really matter, but I think that, that's going to be the case. And I think that it probably happen. I don't know. Again, I'm not going to predict when. Emily, you probably have a bigger pulse on this, but I don't want to say sooner than later, because I'm all about recovery right now.
Emily, your thoughts on that same question?
Well, I think that, the low interest rates was the precipitating cause for people to move their residences. So everybody started moving, a lot of our population started moving out of the city into larger homes in the suburbs, both because of lower interest rates and because they're working from home and because we can't travel. So let's get a big pool and have fun in our own backyard. And the businesses would need to follow them. So if there's a correction in the interest rate, as there already is, such that people's decisions to take on bigger homes and things like that further away are going to present a very big problem and a real challenge for the operators trying to be their amenities now.
Yeah, I think the question is, how do you fit? Because satisfying the suburban dining need is very different than satisfying the urban dining need. Whereas the urban dining need is very much about location, who's passing by, and then you have kind of these real areas that are a huge draw in and of themselves. Whereas suburban is much more of, do you understand your place within kind of that family's work week? So, it's, you're there for Thursday night pizza or whatever it may be, or that, you didn't have enough time to cook that night. So I think it's just a different dynamic, and it's going to challenge a lot of these. There's some who clearly have a pretty wide breadth, but a lot of those who are making that first foray into the suburbs
Mhm.
do think it's important to recognize that it's a different environment. It's not the same thing. I want to go back one to Omni, because I think this is one of the more fascinating topics. And for those of you who are interested, we put out a white paper recently on the dining sector. And this is something that we, obviously, as everyone knows, when you think of Omni, you think of IHOP. But you look at their locations where they had really focused on this kind of virtual concept, and they're really outperforming the others in the country. It's pretty darn impressive. Emily, I'll start with you here. Does a heavier emphasis on Omni within the dining space, does it change the way you look for space? Are there new things you have to consider now when you're looking for a location?
Well, yeah, so virtual brands don't need A+ retail locations. So we're now looking for sites that are on a less traveled street. We're just not marketing the same way. So it's not, the visibility requirements have really changed. And in some ways that's good, because that means the real estate is probably less expensive. But it changes completely. And but it also presents a challenge for us in talking to landlords and asking if they're okay with a business that doesn't have retail, service. And some are and some aren't. We're not going to be doing that in a lifestyle center where people are walking around and shopping and eating.
Alicia, for you, kind of zooming out, when you think about omni-channel within the dining space, because I don't think it was always, this natural understanding of this is something that makes perfect sense in dining. What does it mean to you? And maybe it's kind of fullest form. Like what is omni within the dining space?
Yeah, I mean, it has been in a narrative for a few years now, but now it's probably, you're right, the pandemic obviously changed our mindset about a lot of things. And the best way I think I can explain it is we've changed our question. We used to ask, what do you want for dinner, right? And then go. Now we ask, how do I want to eat? Right. And so if I'm out, if I want to dine out, I'm going to know that before I ask that question. But if I'm not, how am I out and about? I can probably just get pickup, carry out on the way home. If I'm home and my kid's being fussy, I'm definitely going to get delivery. If I have 10 minutes, I'll just run quick to the drive-thru. I think the question has changed. And I think because of that, because now it's a consumer expectation for restaurants to be in all of those consideration sets, and so including the marketplace, which is something that is a completely separate conversation. And this is an interesting conversation right now happening in the pizza space as Domino's and Pizza Hut struggle with delivery drivers. They're not, should they be on the marketplace? Well, consumers are on the marketplace. A lot of consumers go to DoorDash. So omni-channel means all of it. How do I want to eat? And am I going to make that decision based on opening my app? Probably, mostly. And so it also includes, making sure we're checking those boxes of convenience. It's not just drive-through. It's not just delivery. It's GPS triggered curbside. And Emily, we didn't talk about that. That has real estate implications. You need a parking lot for these drive-up spots, and so omni-channel is just, we as consumers were kind of inching toward this on-demand mindset, and the pandemic just expedited it by years and years and years and years. So we want what we want when we want it, where we are. And restaurants need to provide that, and it has really challenged this business operationally.
I want to, I'll end on this because we are running close to time. Alicia, I'll pull back the veil of secrecy here, but you and I, when we were speaking, we're discussing this idea of editing menus and kind of shrink, a lot of restaurants talking about, hey, we're going to shrink down our focus and is that part of, like, it's not just the rest, it's not just the menu, it's also the services you provide. And like, again, taking things from other spaces like, Nike and retail, Nike saying, all right, we're not going to be on Amazon anymore. We're not going to be in this wholesaler anymore. We're going to focus on areas that we can control. Do you think, go to both of you with the same question. Do you think that restaurant chains and across these different subsegments are going to need to start saying, we do this and this, but not this, and that's okay? Or is it, no, you have to provide everything to everyone? Emily, I'll start with you.
I don't think there's as much opportunity to provide everything to everyone, for several different reasons, one of which is product shortages. For those things that people couldn't get as easily, like things like chicken wings, they had to shift very quickly. So I think that it just depends. And then if labor is a challenge, then stuff that requires more highly skilled labor may have to fall by the wayside because we can't get it done. So I just think there's a lot of different moving parts to that.
Alicia, your thoughts on that same question?
I think that it's foolish to try and be all things to all people. This is why we see Raising Cane's is a great example. It's like the most simple menu in the industry, right? They've never changed. But I also think that there's pent up demand. I think so many concepts trim their menus, and we have a supply chain, crisis, like Emily alluded to. There's pent up demand for menu creativity again. And I don't know when operators should embrace that with labor challenges. Again, it just adds another complexity. I think that, to be nimble with that, we see these virtual brand launches. IHOP is a great example. I see it up on my screen. They've got 2 new virtual brands. So they might not add to their core menu for IHOP, but they're getting creative. They're getting incremental sales from Thrilled Cheese from their kitchen. And that, those incremental sales from Thrilled Cheese is going to that operator's, balance sheet. So, again, I think that this is early days on this. And I think once we navigate these really tricky inflationary and supply chain issues, I think this will be an easier question to answer. But right now, I think it's a near impossibility to be all things to all people.
Yeah, I think you're right. All right, We'll do this one in 30 seconds just because it's a great one. With the industry consolidating and costs rising, is there a future for independence? Alicia, you get to go first.
Yes.
I know it's unfair, but like the tight answer.
I'm so glad somebody asked about this. So what's interesting, I wrote about this last night, and I always get kind of weirdly teary-eyed when I write about independents because all of us here care about them, right? Domino's had a campaign to help independents during the pandemic. We are seeing traffic return to independent restaurants. We're seeing it, and I think that there's more pent-up demand there than ever. And I think if there is a silver lining to pull from this crisis environment, I think it kind of raised awareness of the challenges of running an independent restaurant. I think consumers are more in tune to that. We saw gift card sales to try and save our favorite local. But we saw all these campaigns that were just really endearing. And I think that there's going to be a pendulum swing hard and fast toward independence, in the coming year. I'm saying that so I speak it out into the universe so it happens, because our communities thrive with independence, and they've 80,000 restaurants closed, and they don't have rainy day funds, and so there is a space for them, absolutely, because consumers will they'll clamor for them.
Emily, your thoughts on the same question?
Yeah, I think that one of the things we saw unequivocally when COVID hit and when people were returning to restaurants was this outpouring of support to our independent restaurants, to our neighborhood restaurants. And it was so clear that people wanted to help them survive. And like Alicia said, whether it was buying gift cards because you're still not comfortable going, or choosing for that, that meal occasion, you're going to go to your neighborhood your neighborhood place so they have a better chance of surviving was just so apparent. And then I think, beyond that, I think it's also very regional, and there's a very active, I'm in Houston, there's a very active independent restaurant population here of amazing chefs, and they have raised tons of money to help each other and had lots of benefits and charitable events, and got awareness out there, started coalitions for independent restaurants. So in markets where they're important, I think I think people are voting with their reservations to support their independence.
Super important. And with that, I want to thank Alicia, you, Emily, both of you. Thank you so much for joining. As expected, this was phenomenal. We really appreciate your insights, expertise, and both of you joining us today. Thank you all for kind of listening in. It's always a pleasure kind of getting to have these conversations together, and for all the amazing questions that came in and comments. We're going to be doing our next webinar is coming in I think it's that second week of June, maybe it's the 7th or 8th. Look out for that email. We're going to be focusing on the grocery sector. For those of you who saw in the chat, we're having our event at ICSC on Sunday. Please join us if you're around. We'd love to see you, or stop by the booth. We'll be in the exhibit halls as well. So hopefully we get a chance to meet in person. But thank you all for joining. Alicia, Emily, thank you so much for
having
sharing
us.
all of your
Always appreciate
expertise.
it.
Thank you so much for having me.
This is so much fun always. And everyone have a wonderful rest of your day. And thanks for being here.